The broadcast is now starting. All attendees are in listen-only mode.
Low pace. What a wild day we had yesterday, especially with the plunge in precious metals, gold and silver having one of the worst days I can remember in recent memory. Also, the S&Ps went right to where they could have broken down at 2,800 and held, reversed, having an update today. Will we push up for a 1, 2, 3? It's possible. One thing I can say with as much certainty as you can say in this business is under yesterday's lows in the stock indexes, they're in trouble. And then next stop is a pivot at 2740. And if we take that out, then we're going to accelerate. Could we eke out one more high even without making a new all-time high? That's also a possibility. So let's look at the gold. So Blake and I were talking about it yesterday, and he showed all these fibs at 1175, and I was trying to explain my philosophy about numbers that anytime everyone's looking for the same number, and I saw some other people showing it as a 61.8 fib, and looked pretty good going into the end of the U.S. session, and then Asia pounded it again. So what I was saying is that when everyone's focused on one level, it's better if it doesn't get there, because if it gets there, 1175 held for a few candles, and then boom, a knife through butter. So it's not the first time I've seen this. I thought it would have been more bullish if it didn't quite get there and then turned. Anyway, you have a key reversal in gold. Well, not a key, but at least a reversal. So Turkey must have run out of their gold. Call me Alex Jones of InfoWars. If Turkey wasn't going to raise rates to defend their currency and the measures they took were not adequate, I think it's a possibility that their central bank went to the gold market, didn't care about the weakened structure of it, and there may have been felt like central bank dumping. Also, a big lesson, I was early, okay, and took a lot of heat. And, that so much for commitment of trader reports, record shorts, DSI. Price is more important than all of those. And, whoever was long had deep pockets to be able to say it, or used very low leverage. I think this could end up being it for a while. This may be the low. I had a 1.618 at 56. Of course, it's still a very negative week. So, the jury is out. We're still sharply lower from the week. But I think it's possible that we'll do some work in here, maybe a marginal new low. But this could have been the low. And it's my belief that, Greg had talked about it. I don't think anyone thought it was going to be this deep. Okay. And silver too. I mean, I had a weekly line in silver right here that I've shown over the course of the last few months. I thought it would take till the fall for us to get here. Actually took it out before it bounced at this, it came in at the 88.6 of this at 1450, and it's bouncing. So I think it's a possibility we're going to dollar top, and that metals are going to rally while the dollar, whether there's another jiggle or not to the upside, that even the dollar bears, dollar bulls and euro bears are allowing for a nice bear market rally back to 118 and maybe 120. Opinions differ as to whether 113 was it, or we have to go to 112 or 111 something. Is what who was the bear that we had on earlier in the week? Hendrick said 111.80 before that happens, but no one knows for sure. This could be it. For a long time, people were talking 97 in the dollar, right? I mean, that actually turned out to be the high of the move. We can make another push up next week, This might be 1, 2. I think Hendrick had like 97.70, so maybe there's another push up, but I do believe that the metals will recover, that before we're under 1100, that we could see at least a move back to the breakdown of 1240, 1250. Yeah, that's right, the DSI. But I get sucked into it. I go, God, I heard record shorts in the gold. Actually, I thought we were just going to have a little bear raid under 1200 before this happened. And I thought, 1190, 1185, that would be enough. But I sure wasn't expecting that. And I wasn't expecting silver to trade under 14 and a half. Anyway, always expect everything, I guess it's a lesson. Anything and everything, expect it. So, we are going to pull back. This is taking pressure off the market. The wands come off. All right. Lira started to recover a few days ago, but I was reading before we got this decline that there's going to be a lot of people looking to buy it here. 560, 550 down here. And the RSI says they might be right. I mean, look at this reading. So, it may not be over in Turkey. This may just be a respite. And maybe if they've sold all their gold, next time they get pressed, they may have to finally go to raising interest rates or release the past or something. But so you have better behavior in the yuan, and actually looks pretty heavy here in the yuan. So maybe this is it. It had a 3, nice divergence. Anyone ever traded? I've never traded it. Our spread's pretty good. You guys ever trade the yuan? I want to trade the yuan. Anyway, looks like a decent technical currency to trade. May as well trade it. They want it to be the reserve currency, which it will never be. Maybe part of one. Okay. So Yassine has traded it, raised its hand. Okay. Also, the NOK is trying to top here too. A couple of attempts here. The 1 hour confirmed. Maybe we get one more push up here as well. But this is starting to look toppy. Maybe we go to 850. So maybe one more push up in the dollar into next week. But I think over the intermediate term to me, which is 5 days, intermediate term, I think we're getting closer to a dollar peak. And I think we could have pretty good correction too. Dixie may be back to 92. That would shock some people. You would assume that's going to be very bullish for risk. But, risk didn't do bad with a strong dollar. I mean, the stock market really went on a march with a strong dollar. Well, if we get this dollar top, we'll be able to test out Steve Olgey's theory or guess that the market did well with the dollar at the same time. I mean, the dollar was rallying all the way back from the beginning of the year. Look at the beginning of the year after this plunge in the stock market. So really, they've been running together. So Steve thinks that there might be a problem with risk when the dollar turns. And the dollar has a chance, once it does turn, to maybe pull all the way back towards 92-ish. Okay. In here, I thought we might do it before it looked like we are going to have the blow off, but then that would just be a normal correction, right? 88.5, 8.5. So that's about 61.8 is going to be around here. I'll have to clear up a lot of my fibs, but that could be it before we get the next big push to some of the bulls are talking over these highs. Some are looking for a failing rally, but much higher up towards, par 102. But I think going into the fall that we're going to get relief from dollar strength, and that'll really be the key. If the market gets what it wants, a weaker dollar, stronger yuan, stable lira, and the market sells off for other reasons, like economic ones. So I have Lydia today, so I know a lot of people are interested in the pound and the levels, and Blake was showing some weeklies, and we are into a major support zone, maybe ripe for a turn. So it's going to be good to talk to Lydia. She has some very good levels that she presents every time she's here. And I think I'm going to pass it over to Blake now, see what he thinks about gold. I know he's starting to focus on it. What he thinks about the dollar up here. We got a mutual tweet. Someone showed a dollar index. It may have been the FXCM or the emerging market ones, but that's my view going forward. It doesn't mean when I have a view, I execute on it, but now I'll start looking for technical reasons to do it. So, how are you, buddy?
Good. I can't stop yawning today. It's Thursdays and Fridays are always they're a beat down for me. It's like I come out of the gate pretty strong for the week, and then the shortened nights throughout the course of the week end up weighing on me a little bit, and here I am. So
yeah, well,
yeah. So how you doing?
Good, buddy. Doing okay.
Let me see here. How come I cannot?
Do you need me to pass it to you?
Yeah, it's weird. I can't for this. Wait, hold on. You know what I mean? I need to do. Hold on. Give me 1 second. I know what I'm doing. Okay. All right. Presenter. Here we go. All right. So, I pretty much agree with everything that you said, regarding precious metals. I'm going to do a real quick review of them all. And you're right. We pushed through those key supports, and we did it in Asian trade. After seeing the close yesterday in gold and silver, I thought that was going to be the case. I was like, oh, they're going to push it hard in Asia, just get those stops out of the way. And they did. But we're going to talk about that here in a second. I want to take a moment, just because one of the reasons why the dollar is confined at the moment is that there's some really big options expiring here in the next couple hours, in like 2 hours time.
So they'll pin it so they could collect all the premium.
Exactly. So like the cable, like a real big expiry is happening. It's like 1.7 billion at 127. Yeah. So we're just kind of
that's exactly where they want it. So, they collect on both the put and call side. Everyone who bought puts or calls, they took the other side, the writers, and they just go, okay, payday.
Right. And, so they're keeping, granted, as long as there's no like news that pushes the market one direction or the other, then they're going to try to do their best to keep prices contained. I am looking at the cable as a possible inverted head and shoulder pattern, especially if we break through 127.35. Now,
nice.
Let's talk really quick about the dollar first, and then we're going to talk about precious metals. So I put in a pattern in play. If you use ForexAnalytix, a pattern in play yesterday as we came through the ascending wedge. There was no technical like fib levels that I was seeing us really hit. But the formation that we have is the ascending wedge, which is a bearish reversal pattern, which is obviously setting up right now. Now, with this being said, there are some technical levels being hit on some of the other majors, which kind of clued me into what I wanted to do with the dollar. But the big chunk of it was really with what happened with gold and silver. I knew gold closed on. Let's talk about gold for a second. Here it is. So gold, hit this major confluence, and Dale, you're right. We pushed right through it, just enough to stop everybody out in gold. And
I mean,
gold,
who's long anymore?
what's that?
Yeah, who's left long after
Right,
that?
and even the traders that were trying to pick it up yesterday, they got stopped out as we pushed through the 111.70, and you had to obviously after a move like this you got to keep your stops a little wider. I mean, this has been a big move. Look at what gold has done just since spring. Gold has lost
1360, $200 decline.
15% just since the peak in April. Now I do think gold is we got this channel, and I think we're going to recover right back to 1200 here. Big hammer developing today. I think this is going to be playable, and you can play it right back up to 1200. Now whether or not we can break back above 1236, this was the big level we were talking about a couple weeks ago, but really we have to get back above 1200 period in order for gold to really
that would do it then.
That
a $40 move, 1160 to 12, and then tack on 40, and you're right there. You're 36.
Yeah, if we get above here, and then you're going to be right back up at 1240 in the next couple of weeks. So now again, I'm going to reiterate what I said yesterday and the day before yesterday. These are big support levels. This is the weekly 2015 low to the high of 2016. The 618 retracement came in at 1170. The 2016 low, okay, to the high of 2017, we're at a 78% retracement. Came in at the same exact spot. So, to be short yesterday, going into yesterday evening, I mean, yes, they stopped everybody out in the Asian trade. You obviously, if you got long, you had to just keep some wider stops there. And you can see with ForexAnalytix, I put in a pattern in play with invalidation at 1153. So knowing that it is going to be kind of wide, didn't get too close, but it came in kind of wide there. And, we bounced right back up again. Now, again, we have to get back above 1200 in order for this to really, really shape up, moving forward. Now, silver, very similar situation. We hit 161% extension of this 2017 low, which is basically the 2018. That's this year's range, but from the low of 2017, this is the 161% extension. We extended down there. You can look at the lows from 2015 all the way through here, and basically we came in right at some really key support at 1430. And silver's gotten absolutely whacked. I mean, we've gone from $17 to 1430. So what did we lose here? I mean, just since April, we've lost 17% in value here in silver. So I would expect that we get a bounce. Now we have to get all the way back to 1560, which we were just there a week and a half ago, mind you. We'd have to get all the way back there to really turn things around. But I think silver is, due for some sort of dead cat bounce, maybe back up to 15. I did pick up silver yesterday. I did pick up gold last night. So I personally am, long the precious metals here in my own personal account, because I don't trade them for the firm, because I only trade, currency. So this is in my own stuff. But I wanted to take advantage of this move because we got really, really oversold, and we were coming into key levels. Now, because of these supports that are holding in precious metals, I do feel that the dollar is probably peaked for now. Now, you said the dollar index come down to 92.
That's aggressive, huh?
It would be, I mean, that would be super aggressive. I mean, but
that's your moving average, I think, down there.
Yeah, I mean, it's down here at 92.50. The thing is and one thing that I am thinking about is there's a lot of people that looked at the dollar index as a big inverted head and shoulder pattern. I really don't see it that way. I don't think the shoulder here was developed enough.
Yeah.
Okay. I don't think that was developed enough, but I think a lot of people are viewing it as such. So you got a lot of longs in the market. So
Steve was calling it a triangle. And Elliott wave guys say sometimes triangles are wave fours, implying that it's a terminal thrust out of it to complete.
I mean, it very well could be. I'm not an Elliott wave guy, but I will tell you this much, that if for some reason we do push back below 95.50, which I do think we're going to test, I ultimately think that's where we're going. As you can see, the 95.50 level would be the target coming back through the wedge. But I think that will turn everybody upside down. If we do break back below here, I think that's where things get a little dangerous being long the dollar. Do I think that's going to happen? I don't know. We'll have to see when we get there. And we also gotta see what's driving the market too. It's not necessarily the dollar is getting here, let's go ahead and buy it if it gets to 95.50. It's like, well, what's driving it lower? If there's something that's like from a macro standpoint that's actually pushing the dollar lower, I might be a little bit less hesitant to pick up the the dollar index as it drops down to those levels too. So we'll have to see how things develop. But let's talk about some of these majors really quick before we have some data coming out. We have weekly jobless claims, some housing data, Philadelphia Fed. Not a lot of key data points, but data points that have notoriously been strong. And if we see some weakness coming into the housing data, which is entirely possible, Philly Fed, initial jobless claims, if they start to tick higher, I mean, those are things that may not move the needle a lot today, but it might be something that triggers more of a longer term. Oh wait, we have to start thinking about economic data starting to slow longer term as the U.S. economy starts to slip or a little bit or maybe slow down. So the euro, as far as the euro goes, I think the dips are probably going to be very well supported back to 113.50. And if we get back above 114, the immediate target's going to be at the 38% retracement. It comes in at 114.25. Above that, you've got the 114.65, which is 50% retracement. And really the big enchilada or the big cheese here would be a move up to 115, because that would be the 618 and also the breakdown point of the range. Now, mind you, this range that we're in from basically all of the summer, we hit the 161% extension yesterday, or came within 6 pips of that 112.95 level, which did prompt me to get long the euro yesterday. So this is going to be really critical down here, but the jury's out to see how far we're going to go in the euro. I think getting to 114.25 is pretty easy. It could be a fairly easy feat even today, but making it all the way up to 115, what's going to drive us up there? I don't know that. Maybe the Turkish lira continues to pull back towards 5. I don't know. The cable. Again, yep. Yo.
Sorry to interrupt. Just one quick note before you move on to the cable.
Yep.
I just wanted to say that we have to remind ourselves in terms of U.S. economic data that PMIs have actually in the last few months started to print some, not so strong numbers. We've had a bit of a hit and miss, and these numbers usually lead things like construction and building permits and housing starts. So all that, slowly seems to be turning a little bit. Not not every aspect of the UK economy, the US economy, but these things take some time to get to feed to the rest of the economy. But just to point out that we've had this hit and miss on PMIs, and that can be quite important.
Yeah, it really can be. And thank you very much for the comments, Stel. Can you take over for like 3 minutes? Or never mind. I'm sorry. I had some I had to address, but never mind. It's fine.
Okay.
Now we have the pound. Now the pound's been obviously blasted. I hear some big options are expiring here at the 127 level. In the next couple of hours, like an hour and a half. But I am looking at a possible inverted head and shoulder pattern with the cable if we can break above 127.35. The Aussie has had a nice push out of this triangle. This was following the jobs report, but really it wasn't the jobs report that pushed the Aussie out. It was the comments that China's going to be visiting the U.S. to really start up negotiations again. So, and then that's what really boosted the Aussie. It wasn't really the Aussie jobs report. The report was a miss. Some of the other data that was good regarding Aussie was like the prior numbers were revised higher, and that might have just kept the Aussie bid yesterday evening, but the Aussie looked fairly well bid. The Kiwi, we have a little down channel here. A break above the 66-cent level would allow the Kiwi to finally recover. And the Kiwi's just been beaten down with the ugly stick recently. So the dollar Canadians, in this down channel, not a whole lot to do here. I think we're waiting more for NAFTA news. Swissy's got nothing going on. The peso's boxed in between this 38% retracement comes in at 1440 and support that comes in around 1880. So as long as we're kind of sitting mid-range, same with the Canadian, there's not a whole lot to do here. And last but not least, the dollar yen. Again, this is a pair that I really have no opinion on. I don't know how to trade it. I think I've said that since like the last 2 week ahead video. So, going back the last, 2 weeks, I've pretty much thrown up my hands and I'm not trading the dollar yen at this moment. So it really is not, giving us much indication. However, if gold bounces and silver bounces, that could weigh on the dollar yen. It could weigh on the dollar across the board, but really the dollar yen could be affected. Now, if risk appetite continues to improve, and I'll tell you what, Dale, we really held, and we continue to hold this 27.90. We, dips are being very well supported. Yeah. There's no reason to be short equities here. I think it's quite possible we can rally into new highs going into this fall. We didn't sell off in the summertime, and the markets might need to see new highs first before really reversing.
It could be. Do you know why Elliott waves? I know you said you're not an expert in Elliott, but do you know why RN Elliott waves? Because he was impulsive. But don't worry, his wife was corrective.
Okay. Oh God, here we go.
I made it up.
That's great, Coach. All right. So we have Canadian manufacturing sales also being released with U.S. jobless claims, Canadian claims, Philly Fed, housing starts, building permits. So watch this data. It shouldn't be a market mover unless we start to see something really move outside of the norms. Stelios, I can't imagine that we're going to see much reaction here.
I don't think so either. We should pay close attention to the not the other numbers of Philly Fed. We have employment, new orders, prices paid usually, or sometimes they have the real meat is in there. So those are definitely worth watching as well. So we're about 10 seconds away now. Yep. Something's coming in early. Jobless claims are a little bit better than expected. The revisions a little bit worse, so they're a non-event.
Yep.
Philly Fed's coming out now, and building permits.
Building permits came in better than expected. Housing starts a little worse than expected.
Yeah.
again, I'm not seeing anything move the needle. I mean, the Philly Fed came in actually 11.9, expected 22. I mean, that's a fairly weak number. So,
and new orders very low. 9.9 from 31.4. Employment also lower. Prices paid much lower. So I think all in all, it's not a huge thing, but Philly Fed was not a good report. That's for sure.
It wasn't, and those are that's the underlying current that we're just you're just talking about. It's like that's the kind of stuff that you start looking at that and going, how's this going to factor into GDP and how's it going to factor into PMIs moving forward? And it's not great. It's not great data. It's not. But again, is it going to move the needle a lot? No, not today. And, the euro is just bouncing around in the 70s. And, again, I think we have to get past the options expiring here in the next hour and a half, really to see anything move much from where we're currently at. Now, let's talk really quick. And I know Andre's coming on today. So
he's here.
Oh, he is here. Okay, so I'm going to bring him on in a few minutes, but really quick, Stelios. So regarding anything from a macro standpoint, what do you see developing? I mean, let's talk about the cable for a second, just because the pound. There's obviously a lot of talk about a potential hard Brexit. Now, is this really something that we should be worrying about, or is it being factored into the market? Is it priced in already? I think it's already starting to be priced in, but I mean, if what determines a hard Brexit versus a soft Brexit?
Well, the big difference is what kind of agreements get set up between the two parties once the UK leaves the European Union. So, in terms of what's priced in, if you remember, a member of the government, I cannot remember his name, I'm afraid, but I can look it up. He said that it's more probably something like 60-40 for a no-deal Brexit. And the market moved down a little bit in terms of the pound, and now it's found some kind of equilibrium. Obviously, cable is dropping, but that's because of dollar strength. So we are currently pricing a better than 50-50 chance of a no-deal Brexit. How possible is that? We've had the people from the UK government talking about it and saying that it's become the most likely scenario. We have to consider that this is also a way for them to tell the other side that, listen, we're not gonna just lie down and you do whatever you want. There is, this is a chance of this happening, and we will go forward with it if need be. So, both sides are still playing poker here. And, it's difficult to say who's on top, who has the more, the aces, although the market seems to think that the EU have the upper hand. I'm not convinced. And I still think I stand by what I've said for some time now, that there will be some kind of an agreement. How deep will it be? What will it entail? I don't know. But there will be something that will take all the uncertainty off. And actually, if you think about it, even a no-deal Brexit takes uncertainty off, because you're not in this, will it happen, won't it happen, what will be, you start getting to a point where things happen. Are they good or bad? You see how it goes, but things start happening. It's the same as Greece. I lived through this a few years ago when we had no idea what was going to happen. As it turns out, it wasn't good what happened with the government and the way things progressed, but uncertainty has been lifted. You know what you have to deal with. So we shouldn't underestimate the power of that in terms of markets and how they will react.
Right, and that's the key is taking out the uncertainty. I mean, right now people are uncertain and they're like, oh, it's going to be a hard Brexit, and we just got to sell the pound as a result, and I don't want to be long the pound in case of a hard Brexit. But once it comes out, I mean, the market's already priced in, and it's like, okay, now we move forward, and you're right, that uncertainty is then lifted at that point.
Yes, and thank you, Darren. It was Liam Fox, actually, who said it was 60-40. And I still stand by what I've said. I think it's going to happen. How good will the deal be? I don't know. But let's just remember, the UK is the second biggest, tied with France in terms of GDP in the whole of Europe. It's not, a little Greece you can just chuck away and not care about. It's a huge economy. And we're talking about trade deals that they might do with the EU or whoever else. if there is no deal with the EU, this is still going to be a big economy, exporting, importing lots of products and services. There will be countries who want to take a piece of that action. It makes perfect sense. So it's not like the UK are going to be left completely alone in the world and the rest of the world moving forward. I don't think so.
Right. Okay. Hey, and by the way, the euro is pushing higher right now. I think one of the reasons why the euro hasn't moved higher today is because of all the options that are expiring in the cable at 127. But the euro's pretty much ignoring what's happening with the cable, and the euro dollar is starting to make its way higher, and I think above 114 we're going to start to see some stops get triggered, especially overnight shorts that believe that this dollar is going to continue lower. Now I know, speaking of the euro, and I don't want to steal his thunder,
EG looks like it could like it's getting ready to make another move after this little 1 week pullback.
It could. I mean, the euro pound could make its way back up to 90 pence. I actually, thank God, I covered it yesterday at 89.05 is where I covered it. Man. It was just, timing was fairly lucky. I would just consider myself lucky there. But I don't want to steal his thunder, but I'll tell you what, Andre, at the end of yesterday, he put in a pattern in play in the euro dollar at 113.40 to 113.62. It's starting to move higher, and so Andre is here this morning. Andre, good morning.
Yes, good morning, everyone.
Hey, nice call, Andre.
Nice pickup on the euro. So
it's a simple harmonic, and it's based on the specific fib ratio. So we just wait and for those who feel comfortable, you trigger your button to enter the trade. Just that. But yeah, it was a nice entry. We have a few other pairs or instruments trading at crucial fib levels, completing also some harmonics, and that was great. Yes.
Well, let's see what you've got. I'm going to pass it over to you for a bit. I'm going to have to put myself on mute just for a few minutes.
Okay.
But Andre, and I'm sure everybody wants to hear and see your charts. Your charts are probably the most beautiful charts I've ever seen. Anybody do so? You're quite an artist, that's for sure. So,
thank you very much.
All right, I'll be back in a few minutes, guys.
Thank you. Well, the idea.
Go on, Picasso.
The idea from my charts is not obviously to call your attention for all those colors and all those artistic movements, no. But actually, it's just a way to push people into the concept. So it's one harmonic behavior based on a specific fib ratios, and just as simple as that. This is Dixie, and this was a pattern that we were talking about previously, a few webinars, I believe last week, before the price reached the 161.8. So I was expecting somehow at this point the market to build something there that points me into a bearish momentum. So we are now facing, as you told before, we are now facing the second top. The market can print us that the third one, building the three dives. We are facing bearish divergence between RSI and MACD, suggesting that the market can actually start now searching for lower price territory. So at this point, I have two strong indicators, and for those who are trying to search for the best indicator possible, I believe there's no such indicator, because most of them will work. They are lagged indicators. Stochastic, eventually it will work as RSI, but most of them, and let's say 90% of them, will work with a delay. So they require a close candle in order to print you something in the indicator. But those two indicators, the MACD is a momentum indicator and the relative strength indicator, they only work for me, and because I trade and I work around harmonic concept, they work very well when I search for the completion points of the harmonic synced with bearish divergence or bullish divergence in case of searching for bullish setup. So, but that conversation apart, so we are now facing a potential, we are trading at the potential bearish zone, which I will not ignore the possibility for one eventual edge and shoulder. Okay, obviously we need to wait for that pattern to develop, but based on a simple price action, we can wait the price to find some support at previous support zone. And eventually some relief, and then trade even lower, or obviously a direct sink into other lower levels. At the same time, we have DXY playing at the 161.8 as we were expecting inside ForexAnalytix. We have also euro versus dollar printing another bullish setup, and for that one I need to go back to our website and push that chart on euros. So this is our PIP, our pattern in play. So and it's a 4 hours time frame chart, and it's nothing more than my last opportunity based on this time frame and based on the bullish harmonics at this level. So this is my last opportunity to try to get longer with euro dollar. I've tried a few points above and I've failed. So this is my second and last opportunity to trade it, or to try to engage it and to bring it into higher prices. 114,900 is my first target at 38% retracement. So this is euro versus dollar, also with an interesting setup. Also,
and so I noticed with the euro you're targeting close to 115.
Let me check this.
Sorry, I didn't mean to, before you.
No problem at all. Let me just verify that. So I have targets, 114,900. Let me just push our fibs, and we can try to figure that. So it will be the 38% retracement from these highs here. I'm not sure if I'm using magnet mode into these lows. So we can use actually a specific price. 114,728 or 20, no? So this is a 38% retracement, Blake.
Yeah.
It's usually at that price zone, close to that price zone, we start to and eventually most of the people before reaching targets will start to close positions, no? But
you're right.
At some point, I like as soon as the price approaches that level, I start to partition my position. Until there, I just need to wait. But let me just put the prices at the top. 728. Yeah, but it's an harmonic pattern that usually works fine when supported with these types of bullish divergence. So we have two bottoms, and I believe it's clear for everyone we have these bullish divergence in play. So for those more conservative traders, eventually they will wait for the structure breakout. But I'm not the best one identifying those structures, because we can actually use the close price of the candles to identify a channel or a wedge or a triangle or whatever the market is printing it. But we can also use the higher highs of the candles and the lower lows, and it can change a little bit the how may I say, the structure, the structure,
Yes.
and the pattern itself.
Looks pretty constructive. Nice look.
And that's why I like to search for harmonics on those territories.
And Andre, I know that I talk about three drives a lot, but it doesn't always have to be three. Sometimes one divergence is enough, right? In your experience, what would you say? It's about 50-50 that they stretch out into three?
No, that I believe that will depend on your personality. I believe if you require, it's a criteria that as any other. If let's say you are mentally prepared to trade the three drives constantly, searching for those movements and searching for those criteria, and you will apply your risk and risk strategy behind, and you will trade it over the next 500 trades. Okay, and I believe it's just a matter of personality. The same way that someone decides to trade just triangles or heads and shoulder formations, or if the same way there are people trading only specific pairs. I will only trade Dixie or DAX or Euro Dollar for the next 1,000.
Great point.
So,
great point.
I believe the market works with criteria, and we need criteria, and the definition of those criteria are crucial for us to survive inside the market. If you have no criteria to trade, please stay aside. So,
and you don't need a lot of them either, do you?
No, not at all. We tend to complicate a simple process. I've talked with a friend about the simple patterns or the basic patterns the market produces, and people can survive inside the market just trading an ABC correction. At the end of an ABC correction, you buy the markets or you sell the market at the end of that pattern. Learn how to identify that pattern. Learn how to identify the breakout of that structure in order to trade a reversal of that pattern. And if you learn something and if you repeat that process over and over and over again, you will format your brain to trade it, and you'll get better and better and better. And eventually, you'll reach a comfort zone to trade the markets.
Great mentoring, Andre.
Yeah. And that's why and repeating myself, that's why I trade the harmonics, but because they allows me to identify those specific fib ratios. I will apply a specific risk strategy to trade them, and I will repeat that process over and over and over again without failing. So back to our charts. This is German DAX. Previously, we were trading at the completion point at this symmetrical three-wave structure. I was mentioning the price has already
you called that break.
Yeah, and then the market started to fall, and again we are trading very close to the default heads and shoulder projection at 12,105. So I'm not so sure if they will find a support here. We are now obviously trading at the previous structure support, the double bottom formation here, and there are a lot of territory, as I mentioned before. And if you are a subscriber from ForexAnalytix, I believe if you search for those charts on DAX, this is a weekly time frame chart. At this point, I was expecting the right shoulder formation, and the market has actually the market has printed this neck a few points below, and then retraced the 618 retracement and fib, and from here we started to decline again. So if you go into a weekly time frame chart from here, let's try to keep this simple and to clear all my draws here.
You've been in the zone, man.
Yeah. Well, these three drives that we were following at that period, at that time. I was expecting just as a second bottom, as a double bottom setup, in order to force the price to go higher. But the neck was for the few points below, and then the 618 retracement. So if I use my fib here, we can see the 618 acting as a specific price zone where the price may feel some pressure, and from here the price extended a few points above and actually nailed the 78% retracement. Actually,
love that number.
Yeah.
You know why? Because by then the 50% and 61.8 people have given up.
Oh yeah, and because most of the times the people tend to I like the 6-200. It's a golden ratio for some reason. So it's a strong fib level. But curiously, I have no harmonics closing or completing at the 6-218. All of them will complete at the 78 or 88% retracement or extensions. So there are no harmonics completing at this specific fib level. We may find, or we may search for, and I do that constantly. I try to find those harmonics completion points synced with major or different degrees golden ratios inside the market. So let's say I have a butterfly. Let me try to give you an example, because we have here. But just to finish here, this is DAX, and we are facing the previous structure strong support. So I'm not so sure if they will hold here, and if so, they eventually they will start to pull back and eventually to reinforce this descending channel or descending structure. But let's jump into oil, because it's also and it's also published inside ForexAnalytix for those who are subscribing. So this is the Gartley. This is one Gartley pattern, and what I try to do is to identify the completion point and giving sequence to my last approach. So I always try to search for those completion points synced with other fib levels. So at this moment we have oil above the 127 extension. This is the completion point for the harmonic, and the 618, the golden ratio, also below as a support. So we have I have a confluence between the completion point for the harmonic and a specific golden ratio. So from here I will not be surprised to see these instruments printing some points above, eventually reinforcing a structure, eventually a descending structure, or trading even higher and reaching the default targets at 38% retracement. So, but from here I can see oil entering in sideways, or eventually a fast pullback into the 38% retracement, synced eventually with euro and dollar also losing some strength. And what I want to show you more, I'm completely out from cable and dollar versus yen, as Blake mentioned before. It's not a safe territory to trade, but well, we are in in a specific price level here on cable, but I lose all my harmonics in terms of price action, and the most recent price action, I lost all my harmonics. All those bullish setups during that process, all of them failed, so I stay out for a while. But as mentioned, as Blake has mentioned, so we are trading the golden ratio. It's a multiple support and resistance level. It's like a pivot zone between the previous consolidation period and the impulsive momentum, or the pullback actually that forces the price to print this cipher pattern. It's a major cipher that I published before, and well, 78% retracement from all this swing, the last one, and the price has started to pull back. I was not expecting to see cable breaking this 200 meter average so fast, at least. But as Blake has mentioned, so we are now trading at the golden ratio. I will not be surprised to see some bounce here. We have at the same price zone previously. We have an interesting momentum there that well, I will not be surprised to see an inverted momentum. No, it's similar as a, let's say, a left shoulder and a small right shoulder formation. It's not that we can call it the head and shoulder formation, but I will not be surprised to see that pullback and then lower prices from here. The next harmonic pattern that I will search for cable it's around the 161.8 extension, 78% retracement, and it's positioned at around 1.22. So it's a lower, it's a deeper pullback. But I remember one of my first approaches here with Dale. You asked me, so Andre, what do you think about cable? And we were trading. Actually, we were trading at this top, and you asked me what you were expecting. So I'm expecting the breakout of that structure. So if this is an impulsive momentum, this is a correction, and I need something that bring the price even lower. Eventually, it has started now. It has started already, and it will push the price now into new lows from there. We never know about that, and during that process, the price will print me some other harmonics to trade in both directions. So I'm not very concerned about where the major direction of the price will go. So at this moment. So again, we are facing the golden ratio, previous structure support and resistance levels. I will not be surprised to see cable bouncing from there. I believe we have some guests today.
Yes, Andre. Lydia's with us.
Yeah, Lydia. Yeah, I always like to hear what Lydia has to say, because, as you said before, she's amazing detecting those levels in our prices, in our charts, and it's interesting to see. So just to finish with silver, silver it's actually, and let me change the provider, because it's interesting, because if you change the provider for your charts, patterns may change also. But curiously, we are facing the same price zone for different patterns for different providers. So I have dollar FXCM providing me this deeper retracement here. It's forming the BAT pattern at 88% retracement, 14,408. And for those who are following ForexAnalytix, this is a weekly time frame chart from April 20. And at this point, I was saying, okay, obviously there are only two options inside the market. One of them is to go up, and the other is to go down. But based on the harmonics, we can try to forecast or to identify the next ones based on a specific time frame. At this point, I was expecting two options. One of them is to start to print me patterns above, and the other one starting to printing me this bullish setup below. The trend is bearish, 200 media average. It's a bearish momentum. Why not to expect that pattern to be printed and set an alert at that price and you wait? At this point, we are facing actually the market has bounced from that level, and that level, FXCM providing me a BAT pattern. And if I change the provider into Luanda broker and Luanda provider, I have another, it's a butterfly pattern at exactly the same price zone. It's just what it is. Don't ask me why, because sometimes it pisses me off because I need to measure a specific momentum or a specific wave, and those gaps between different providers can be tricky to deal with. But at this moment, we have nice structure on gold and on silver also. Eventually, as Blake has mentioned it, I expect at least my minimums at 1583. This is a 38% retracement for the butterfly pattern. And well, have a nice week, everyone. And thank you, Dale, again.
All right. Great job, Andre, and beautiful work. And yeah, some of the providers will show a flash crash candle, some won't.
Yeah.
But it's interesting. They both ended up being bullish reversal type formation. So it almost gave you confluence.
It's almost,
you know what I mean?
If you work on that for the next 10 years, eventually we will get a cycle.
Yeah. And, I want to thank you very much for showing up this week, and Greg is showing up this week. That is really the sign of a team.
Yeah, it's always a pleasure to be here. Yeah.
It's like the NFL, it's next man up. Next man up. So, a good team plugs the holes when one of the regulars aren't there. And definitely you did that for us this week, Andre. Appreciate it. And thank you very much.
Thank you.
All right. So
and welcome, Lydia.
Yeah, here we go, Lydia. A lot of people waiting for your levels. You've become a celebrity here. You're a celebrity at ForexAnalytix.
I'm a big fan too, by the way.
You are too, still? You're infamous.
Thank you so much.
Not you, Stelio. You're famous. Stelios is infamous. So how are you?
I'm very well, thank you. How are you?
Doing okay, Lydia. So, before we delve into the technical levels, I thought that maybe you could give a definition or a description of what a hard Brexit would mean, not just for the price of the pound, but economically for the UK. Explain to our viewers what a hard Brexit is and what the ramifications might be if it goes that way.
Okay. So from everything I've been understanding over the past couple of years, a hard Brexit would be, I think, what we all imagined when the vote went through, and
right.
would be leaving the EU. Being a sovereign and everything that means. So, immigration rules would change. Trade rules would have to be rewritten with everyone, I think with all of their trading partners, and be completely a separate country from the European Union and everything that would entail. And so as those economic realities came to start to roost, you have manufacturers making decisions, you have banks and financial institutions now making decisions, needing to put in office within the EU, as well as have their London office. Some are just moving out of London or contemplating moving out of London completely so that they can be in the EU. So And then you have your different immigration laws have to be rethought, and how people move, people who work in the EU and live in the UK and vice versa, and how do people move so those things don't are more seamless. So I think as those realities started to be dealt with, we started to get the term soft Brexit, and that was, well, we don't want to have maybe immigration maybe separate, but we want the trade rules and the trade agreements to remain in place. And so we want to have different stipulations. We don't want the financial institutions to remove their center from London, but we don't want to have certain trade agreements in place. So that's when the soft Brexit term started to creep up.
Okay.
When we started to realize, a hard Brexit meant rewriting all the rules of engagement and all the labor that
so it would be too chaotic, and it would have financial consequences for UK losing business to Europe, etc.
Right. etc. Right.
And therefore the pound got crushed after the Brexit vote, and we haven't seen that low again.
Right. We haven't seen that low again. And interestingly enough, we got a fake out to the upside because Theresa May was starting to backpedal all of those hard Brexit realities. And I think the market has seen that maybe she cannot achieve that. And so we've seen the pound tumble, along with trade wars just in general and tariffs helping to underpin risk aversion in the market, which is why the dollar is just blowing through the roof.
Okay, so a lot of people are calling it 60-40, 50-50. What does Ed Faith might think the odds are of a hard Brexit?
I don't like doing fundamental.
All right.
So don't put me on the record on this. I think
you have good
intuition.
Think
it's all or nothing. Yeah, I'm with the 50-50 crowd. I think it's all or nothing. I don't think they can have their cake and eat it too. I don't think the EU will allow it.
Yeah, that reminds me of that. I think it's an Ameritrade commercial where it shows a couple brokers, Lydia. They're sitting in their office. They're full price brokers, and Ameritrade's showing trades for $4.99. Plus, they get to talk to a broker, and one guy says, "Full service at discount prices. It just doesn't seem fair. It's like having your cake and eating too." Anyway, I'd like to move to some technical levels that you have in mind now. So, to me, it sounds like you're kind of negative here, but aren't we due for some type of, rip your face off type of bear market rally in cable?
Long overdue. I've been waiting for it since we broke below $1.30.
Right.
$1.30. So all of this congestion in here below 33.50, above $1.30. I thought we would get that finally get some kind of correction to the upside. And yes, it's been, I don't know, several weeks. It's been months. It's been like 3 months. And we haven't had a correction to the upside. And I know a lot of traders are, want to keep selling, but I'm going to just repeat. And I said it again a couple weeks ago with you. Cable always corrects. The pound always corrects. So now that we've hit a lot of these major levels, and we haven't seen this follow through. This is decent follow through. So I don't know if anybody remembers 27.50. That's this bolder support line here. We were trading at that level here when we made that 119.50 and started bouncing. We couldn't break higher. So we were here. We've been here for a while, and I think a break below this level is actually quite significant development for the pound. I also think that it is long overdue for a correction. So I would be a little bit wary here. Just drilling down, I like the action that we've had. This was a fib over last week's action. So the spike into here, I think this was after UK CPI and then US dollar retail sales, which took us lower. So, nice spike into the 38.2, and now a break of that support level follow through to the downside. So I like the price action is clearly very bearish. But just to come back to the daily chart, I do believe that we get a correction of this downturn. But because it's been 3 months, it might be that we actually correct from the congestion area. Maybe it's going to look like it's more in here, whereas it takes us back to $1.30. $1.30, 13 is the 50.
So old support becomes new resistance.
Exactly. So we have the confluence there, and the 61.8 hits on some of these lower highs, and that's where we want to pay attention to $1.31, which is the 618 here, because then that would get us into I'll just delete it real quick. A correction of the overall move, which would be a much healthier correction, which could see a downside move then start to move more significantly below $1.2775. So that's what I like. I haven't been positioned in the pound. I've been in the euro pound, to be honest. So I've just been watching these moves pretty incredibly, because I've been wary of the downside moment follow through without a sizable correction happening.
Okay,
So,
well, that's a great segue into euro pound, that perhaps a weakness in the pound is due to all we had was a 1 week pullback in EG, and now it looks like it might be back on its way again. It held that 89 level, and maybe it's because euro is going to outperform like it has been since April.
I know.
Maybe there's another push up in euro pound if this 89 level holds, and we make
if this 89. So I'll put another caveat to this 89.50 level. If we can get above 89.50 here. So looking at this, we spoke about this possible move. If we could break above this 89, like this possible move to 90, and it materialized to the pip, or that 90.15 there on the extension. But if we just drill down into the 240, so this is what I'm looking at now. Oh, let me go back. So it's a little difficult to see, I think, but I can zoom out here. This move here that took us from 88.50 to 90.15, this move, or 90.30, this move here corrected this past week, or last week, and 78. Opened. And moved us and broke nicely below the 61.8. So to me, that was a signal of a reversal to the downside. But we got, like you said, 89 held, which is something and this is what I say all the time, right? If we get a break of a level, don't chase the level, wait for the bounce back. And that's what this bounce back here does. So a bounce back into that fib, but I draw, instead of when it's a fib break, I like to draw a fib on the downside move. And so looking at that, today's rally, yesterday's rally, and even into today has taken us right into the 50% line. We need this 89.50, which is 89.62 here, but 89.50 in general, if you look at on the weekly chart, those are some highs that we need to kind of stay above if we're going to see follow through back into 90 and higher. So I'm looking at this move here as a possible move to the downside to kind of get us lower after a break of the 61.8 there on the daily chart.
Yeah, it's going to look kind of ugly back under 89, isn't it?
Oh, yeah. I think so. Yeah.
The one thing that makes me think that there could be a charge for new highs is the RSI at the high was a confirmed high on the 4-hour and the daily. So there was no divergence up there at the highs. Now, markets can turn on confirmed highs, but it's not a high likelihood. Usually they turn when momentum is no longer confirming the new high.
Exactly. You're right.
So, I mean, that's one thing that, always pops into my head. Do highs and lows confirm or diverge? So, that's euro pound. Oh, you want to show the 240? Go ahead.
Yeah, no, this is just the look that I want people to keep in mind, especially if RSI is confirming. And we had a break of the 618. This level, if we can't get and stay above 89.50, we're going to see more movement to the downside, which really doesn't negate your view, Dale. Doesn't negate your view. We could still, momentum is still bullish, and it could be we could see what kind of follow through we get below 89. But I think you're right. Below 89, we see a move into 88.50.
Yeah, I think it changes. Then it changes. Then I
Right.
say the hell with the confirmed high if it takes out 89. So how about Guppy with this yen action's been so choppy? It's mainly been led, this Guppy move has mainly been led by pound weakness, and the yen's been sideways. So what are your thoughts here?
I like this move into 140. And so this was the move that when we spoke last, this was the kind of the last look that we had where we had this failed low and it gave us a new high, but it was still in the correction and we got the break. Even if you draw the fib on this, this was a nice fib move into the, I think it was the 50.
Yeah, you know what's funny is you were right about this move, Lydia. And it's happened to me a million times. Like you said, you know, I don't trust the yen. So you thought part of the big reason for the decline was going to be U.S. dollar yen weakness, but the trade still worked. But it was pound weakness.
Came out of nowhere.
It didn't matter. I mean, because you were still bearish, and that's funny. You could be right for the wrong reason.
Yeah, which is why we always trade the technicals and not the fundamentals. Like we try to, that's why we use the technicals, because it was off this weekly chart. This weekly chart was saying, okay, we have a failed high here, and we have another failed high. We got to move lower than these lows at 144. And that would bring us into the 50% line. 140 is right there. So that's what the technicals are showing us. But I was looking at equities as well and thinking that the yen couldn't gain much strength as long as S&P was above 2,800. And so here we are. And only because, the technicals show differently, we had this move into the fibs. And when we had this nice bounce here and held below 147, I mean, who anticipated this move was going to keep going to 140? I anticipated it, but, it's a nice looking move. So I think what is interesting with a lot of these other pound pairs, not the crosses, like the Aussie and the yen, is on the weekly chart. They're hitting up against these 50% levels. Whereas on some of the other weekly charts, like the pound dollar, we're breaking and we're signaling reversals and possibly more pound strength. So I'm interested to see what the crosses do. I think pound strength is still very, much in the market. A lot of these pairs could bounce. Just jumping to the Aussie really quickly. That's what's happening here. It's a hit on this 50% just below and a support level. And we got this nice bounce right now. But I think that there's still plenty of pound weakness in the market. And so especially want to kind of take a look at if that sentiment holds and we just get momentum as traders start to come online after the Labor Day weekend, which is just a couple of weeks out now. So these are things I've just kind of, don't pile in to all these moves quite yet, especially as we're waiting for some of these bounces to occur.
Next year, let's do a live broadcast from the Hamptons with all the hedgies. We'll do it from the beach, Lydia. What do you say? We'll say, hey, guys, look, we're in FX. We can live large, too.
Right.
We don't need $1 billion mutual fund to manage. So, all right. So that covers the commodity currencies. I was just going to ask you on the Guppy, would you look to sell rallies or buy dips in it here?
I would actually look to sell rallies.
Like to 44, or you think it has that much in it?
Yeah, well, let's look at it. This is where I would be looking at it. Yeah, okay. 143.50.
Okay. All right. So nothing counter trend there.
No, I mean, you could, quite honestly, because of the weekly chart look, and because we're in this 50% zone on the weekly, you could take a counter trend move here at the lows. I would like to be closer to 140. We're at 140.60 right now, but you could take this low. I mean, your risk is very defined. Yeah, your risk is defined. You want to be, up under 140 with your stop, and you could take a 200 pip rally to the upside. And look at this, 143.50 is our former low here. So yeah, of course, I like corrections. So, but this would be a great place to set up short. It's just harder to catch a counter trend move. That's all.
Okay.
That's
so Manny is asking, Lydia, when you say correction, do you mean a correction up or down in the pound? I'm not clear on this.
Okay, so it would depend on the pair. So
the
a
pound.
correction in the pound would be
pound dollar.
Upside. Yeah, it would be to the upside. Pound dollar would be to the upside. Like so, like the euro pound, that would be right. The correction would be to the to be to the upside, which is what we're in now. We're in this correction right now. So for the euro pound. So this move here is a correction of this downside move. So I tend to speak in terms of pairs, but yeah, in the pound in general, a correction would be to the upside.
Okay. Lydia, why don't you take this time to strut your stuff and show your website and let the viewers know what you do. You have a few different models. You're a registered investment advisor, and I think with this volatility, people would be in good hands with you, because I think traders also make good long-term money managers, because they have to be so disciplined with their short-term stuff, or they end up going away, that it's almost easier for them to make intermediate-term decisions. So go ahead. You with me? I think we lost Lydia.
Journey.
There you
and what kind of mentorship coaching you're needing.
Okay.
And then there's Invest with Lydia is the link next to it. And that is the RIA that I am happy to be a part of. I'm also an investment advisor. We do traditional asset and wealth management, but we also talk to, I actually have some traders with me. So we do look at the Forex market as well, and what how they can look at the foreign exchange market to kind of discern some investment possibilities in other asset classes. So yes, you can, this is just the easiest way to find me and find my services, of course, on Twitter at Faith Might, and follow me there as well. And thank you so much for having me. I really enjoy coming on and sharing charts. It's
okay.
It's easy.
Well, you have a lot of fans here, and people are, would miss you if you didn't. So, why don't I'm actually scheduling for October. Let's get something set up there. I'll be taking a few weeks off after this week, and you talk about everyone coming back out.
Good.
Yeah, recharge.
I'm glad to hear that.
My battery. I
think you're one of the few of us who just go 365, Dale. So
yeah, I have. Well, I don't know. I was in the hospital for a week 4 years ago.
Oh no!
But that's not really a vacation, is it? So anyway, thank you so much.
We're getting a real one in. Good.
Yeah, thank you, Lydia, and hope pips continue to rain down on you, and people reach out to you and learn from you and let you manage some of their lower end of the pyramid, not just their spec funds, but their nest eggs. I know you'll be careful with it, and appreciate our relationship. So thank you again, Lydia.
Thank you so much. Thank you, everyone.
All right, everyone. That's a wrap for Thursday. Good hunting the rest of the day. We'll see everyone for TGIF. And most of all, my trading warrior brothers and sisters, don't just count your pips, count your blessings. See everyone for TGIF tomorrow. Thank you, Andre, for filling in this week, and Grega. Thank you, Blake. Thank you, Stelios. And Steve, get your butt back from that exotic Greek island. See everyone tomorrow. Adios. See you, Lydia.
See you.